Hello, welcome to Atlantic Accounts. Today we're talking about LLCs and S Corps. So you've got a great product, an exciting new service, and you're eager to get this new business into operation. So the next question you need to ask yourself is, which legal entity am I going to use? Are you just going to be a sole proprietor, or are you going to form an LLC? Well, it's important that we do consider those factors. So firstly, with LLCs or limited liability companies, they offer personal liability protection and they shield your personal assets from business liabilities. So they give you that important separation between yourself as an individual and the business itself. That also gives you a lot of flexibility in management because members can then participate directly in decision making or appointing managers. Now, from a tax perspective, LLCs are pass-through entities. And that means that any profits or losses literally pass through the business and go down to the owner. So if that's a partnership, the individual partners, or the sole proprietor, it's just that individual who's the owner of that LLC. And those individual partners then and sole proprietor will need to pay self-employment tax on that income. Now that's in addition to other federal taxes. So that self-employment tax is 15.3%. Now, that's something to be very aware of if you're using an LLC. There are other factors with LLCs like annual filings and compliance, things that you need to comply to. But now how about S Corps or S corporations? Well, an LLC can be taxed as an S Corp. Why would you want to do that? It's because an S corporation doesn't have to pay self-employment tax. So that's a saving of 15.3% of tax. But it's not actually that simple because the owner themselves does need to pay what's referred to as reasonable compensation via payroll. And payroll taxes would be paid on this compensation. So the question is, how much is reasonable compensation? How much should I pay myself? Well, we can talk about that in another video. So once you take those funds out via that reasonable compensation, you can take other profits out without any additional taxes. So where there's an LLC, you would have to pay self-employment tax on the entire profit that you've made. With an S Corp, you only have to pay that tax on the reasonable compensation part. So there is definitely a tax saving in most cases. Now, if you're having an S corporation, there are some restrictions on who can invest in an S corporation, such as it can only be a domestic corporation and shareholders can only be individuals, and certain trusts and estates and partnerships and corporations and non-resident shareholders cannot be investors in that entity. There can be no more than 100 shareholders and it can only have one class of stock and not be of an ineligible corporation type. So therefore you do need to consider that when you are forming your company, what your intentions and plans are in terms of growth and how many investors you might want to be part of the business and how you want them to share in the profits, because that will determine whether an S Corp is the right structure for you. If you do want to become an S Corp, you just fill in a form 2553 and that will determine when the election will be effective. So when choosing between an LLC and an S Corp, we need to consider our business goals, ownership structure and long-term plans. And it's really important that we do seek guidance from legal and tax professionals to make sure that we are compliant with all regulations and make a good decision for ourselves and the business. And yes, that right business entity can lay the groundwork for your success. We hope this video was helpful, so please make sure you hit like or subscribe for more business insights, and don't forget to visit our website atlanticaccounts.com. Thanks very much and have a good day.